the daily edition of Market Wrap with Mo Ansari.
Brought to you by Compac Asset Management,
providing proactive portfolio management and world-class wealth management solutions.
Hello, everyone, and welcome to Market Wrap. I'm Mo Ansari, president of Compac Asset Management, and you're tuned in as you've been doing so for 2 decades now. And as always, you can call in, and I will be more than happy to share with you my 33 years of trading experience. Hold your calls. We are going to go to our guest line and talk to Mr. Ken Shreve. He is a portfolio manager of Market Movers newsletter for TheStreet.com. Mr. Shreve is also a contributor to RealMoney.com and The Street TV and has covered the financial markets for over 10 years. Mr. Shreve, welcome to Market Wrap.
Thank you so much, Mo. Pleasure to be with you.
Ken, let's talk about the market today. Today, the markets could not follow up on yesterday's move to the upside, and we had reversal days down. The market went above yesterday's high, closed below yesterday's, and that is not a good sign overall. How are you looking at these markets right now?
Playing the markets very conservatively here. My portfolio is only about 55-60% invested, and I'm really taking a cautious approach here, Mo. We really started seeing institutional selling, professional selling in the market starting in late April, and I wrote about that in my newsletter, giving readers a heads up that we're just starting to see signs that big money was starting to get out of stocks, and we've pretty much seen it consistently over the past.
So you think the low that we made on that sharp low that we made on the 6th, which was 98.69 for the Dow, that could be taken out, and you think we could be headed even lower than that? Now, that everybody said, well, that was just some kind of fat finger problem. It was some kind of glitch or something like that. You think that is not the case?
Yeah, I always tend to look at the market with a glass half full perspective. I'm not one of those perennial naysayers out there. I do think that the underpinnings of the U.S. stock market are pretty solid with good corporate earnings. We had a great earnings report from Hewlett-Packard after the close today. That stock is trading higher in after hours. I still think that even any market decline, any continued market decline we see from here, maybe going through the summer, it's just going to be a pullback inside of a bull market. But I do think it's a distinct possibility with all of the professional selling that we've seen in the market over the past 3 to 4 weeks, that the May 6 lows could get undercut. And again, I'm not going to turn bearish for the next 12 months. I think this is just a pullback that the market needed, and should set the stage for a nice rally. Possibly in August, September, October.
But if we do go down to those levels, you think those are going to hold, or do you think we could even be headed lower than that? And what would make the market come back up? Because right now what we've seen over the last year or so, it's been institutional investors. It has been the hedge funds. They're the major investors in this market. It's the retail investor has not come back. They're still scared of the market after what happened to them in 2008. Why do you think it's going to come back up? Do you think the economic recovery here is strong enough that it's going to pull the rest of the world up and pull Europe out of its problems?
Well, that's exactly right. I think you hit the nail right on the head. Again, the underpinnings for the U.S. stock market are pretty good. We just got done, by all indications, an exceptionally strong first quarter earnings season. Mm-hmm. The results beat expectations. Companies have returned to top-line growth as well as bottom-line growth. It was really an outstanding first quarter earnings season. I think corporate earnings for the rest of this year are going to be good. And again, the housing market, that's having a hard time getting out of its own way, but we've probably made it through the worst of that. Economic data, inflation, we had producer price index data today that really didn't hint at any inflation for the foreseeable future. So I think by and large, when you have good, strong economic data here, a good corporate earnings environment, that should eventually be good news for U.S. stocks. Right now, the market is concerned about what's going on overseas, and it just has a few things that it's worrying about. So, but you're exactly right. The market is dominated by institutional investors. That's why it's important to pay attention to the institutional selling that we've seen over the past 3 to 4 weeks. It usually, presages more market weakness, but they are the drivers of the market. And I think ultimately, once we get a little pullback in names like Apple and some of your NASDAQ 100 big leaders over the past year, just consolidate for a little while, build some cause. They're going to set up for another upward move. I feel pretty confident about that.
Ken, let's go look a little bit in a different direction today. Germany started to short. They said they're going to have a short ban where you can't sell the market short in some of their financial stocks. You can't go short on the euro bonds and things like that. I mean, isn't that putting the blame somewhere else, saying, look, we've done all of these things wrong. We've got so much debt, but it's the market's fault. It's all these short people that are going short in the market that are causing all this issue. So we're going to ban that, and that's going to fix everything. Isn't that sort of putting the head in the sand?
Well, I mean, wasn't this the same thing being talked about just recently in the U.S. markets, where there was talk about banning short selling and this same situation that was going on in Germany was being talked about in the U.S. Several months ago. So, yeah, I don't think that's the answer. It flies right in the face of capitalism, and again, this was discussed in the U.S. The SEC was banning shorting of financial stocks, and so I don't think it's a good idea. But Germany and what's going on over in Europe. It's a tough situation going on over there. A lot of the German banks are very much exposed to, Greece's debt, and the U.S. market is rightly concerned. There could be some spillover effect. Not so much. I mean, these are not big economies over there. But the fact that big banks in Europe do hold a lot of this debt, I mean, this is a cause for concern for the U.S. market. But
maybe they can just ban from the market going down. They could just say, look, we can only have up days in the market and no down days.
That's right. Exactly.
Wouldn't that be wonderful if they could do that? I mean, I think people would be a lot happier than that if they could do that. But anyways, looking forward, you have some great stocks that you pick out. In your portfolio, you only have 15 stocks, which you share with your readers on page 3 of your latest newsletter that you put out. You said you're only 55 or 60% invested right now. How closely are you managing your portfolio, and do you use exit strategies that if you get into a stock and it doesn't do all the wonderful things you expect it to do, then you do have a way of getting out of harm's way, or what do you do?
Well, Bo, I used to, before I went to the street, before I started working at the street, I spent 12, 13 years working for Investors Business Daily in Los Angeles. And so a lot of my investing methodology is from that paper. So, Bill O'Neill, the founder of Investors Business Daily, definitely advocates keeping losses small in stocks, and I follow that with my portfolio. Yeah, right now I have a very focused portfolio with only 15 stocks. Eventually, it'll have probably 20, 21, 22 stocks. So it's always going to be very focused. But if I buy a growth stock, and this is an aggressive growth portfolio, when I buy a growth stock, I have expectations about what it's going to do. I use fundamental analysis and technical analysis to help me find the optimum time to buy. If the stock doesn't do what I expect it to do, I am not an investor that is going to watch a small loss turn into a big loss. I am always going to protect capital and keep my losses small because, the mathematics of portfolio management, the bigger loss you have in a portfolio, the longer it's going to take to get back up. A stock loses 50%, it has to, move up 100% just to get back to even.
Well, that's wonderful to hear, Ken, because so many people are what I call the hold and hopers. I call the buy and hold strategy the hold and hope strategy, and I've talked about that for 10 years. Mr. Shreve, I want to thank you for taking the time out of your busy schedule and being with us today and sharing your thoughts with us and being here on Market Wrap.
I appreciate it very much, and you keep up the good work yourself.
Thank you so much. That's Mr. Ken Shreve. He's a portfolio manager of Market Movers newsletter for TheStreet.com.